As expected, the Polish central bank left rates at a record low. Today I'm joined on the line by Ryszard Petru, president of the Association of Polish Economists. Now, this was the first rate meeting since the scandal erupted on June 14th, when Sprouse magazine revealed a tape of Marek Belka insulting fellow rate setter Jerzy Hausner and discussing possible central bank help for the government before next year's elections. So before we discuss today's decision, tell us your views on the scandal, and has it had any sort of impact?
Actually, so far it doesn't have any impact, so as widely expected, the rates didn't change. But of course, this kind of scandals does not make MPC members' life easy, since there were some tensions between the central banker, Marek Belka, and others. But I do hope that it will not have a long-term impact on the Polish monetary policy rate settings. As expected, economy is getting better. I don't want to say booming, but the growth is about 3% per year. Probably second quarter will be slower than the previous one, but still a relatively decent number compared to other European countries. Of course, inflation is low, but expecting GDP to grow, one could say there is not too much reason for cutting rates. The only reason for it was low inflation. So I don't think the scandal will have an impact longer term on the Polish Monetary Policy Council.
The Polish currency and stocks, of course, suffered as a result of the scandal. So what sort of performance are we witnessing at the moment?
The reason why its fall was simply that this kind of scandal, it was not only about central bank governor, it was also about the other ministers involved in the government. So this kind of scandal could lead to early elections or some sort of problems within the central bank, and that's why markets reacted. So far, nothing happened. Of course, we'll see whether new tapes will be released, and there's always a risk that it could lead to significant changes on the government or even to early election. And then, if it happens, the market would react. So far, I would say this lot is mainly driven by international factors, not so much but by say internal data. As I said, economy is doing well. Of course, it's not as good as expected a few, let's say, months ago, but still the second quarter will be relatively strong compared to other countries.
And until last month, the MPC's next move was actually expected to be a rate increase. So what were the main factors that prompted a change in expectations? And share with us your views on today's decision and what was said.
I mean, this is a very interesting question since, as I said, inflation is low and GDP is growing, but ECB move changed the perception of the market, and the market is widely expecting that the rates will be cut during the year. Actually, if the rates are cut only by 25 basis points, it will not change significantly the conditions for the Polish enterprises and consumers. So there are two options: or you cut significantly more, like 50 basis points, or you don't do it expecting higher GDP growth. And if you look at the composition of the MPC members, one could say they are relatively dovish. On the other hand, as I said, if you read what they're just saying, I would expect that the market might be surprised and rates might be unchanged during the next part of the year.
The PMI index points to slowing GDP growth in the second quarter of this year. But do you think the improving labour market, strong investment performance in the first quarter, and of course recovering credit still suggests that the current weakness should actually not extend?
I do agree with this statement. I think that this is a weakness that usually happens in the recovery. And during the recovery, you do not have data, that all the data do not prove that everything is going all right. If you look at the European data, you could see that, of course, there is also some sort of slowdown, even negative dynamics in the United States. So, yeah, the second quarter will be slightly lower than the previous one, but still we are talking about a great rate growth of about around 3+%. And if you look also at the composition of growth, private investments are growing. Inflation is low, that it might boost consumption to the extent because people have more money in the pockets. So I would say we are heading towards 3.5 growth of this year, and second quarter will be slightly lower than the previous ones. Especially, what's important is 2015 is expected to be much stronger because public investment is going to add to the current pace of growth, and then we can end up even with 4% next year. And having said that, I would say this kind of slowdown which we are facing, or relative slowdown into the second quarter, is rather preliminary and temporary.
Thank you very much. It has been a real pleasure speaking to you today. Well, viewers, do stay tuned. Do not go anywhere, as we have lots more just like this heading your way. See you very soon.